firstly, we can't ignore what's happened in the markets. We've had quite a tumultuous ride, but if you had to take a very quick snapshot and just say what's happened, well, markets have grown. We've seen great returns in the last 2 years since that first 6 months of 2020. But wow, there's quite a story in between all of that. We've seen incredible uncertainty and volatility in the market. And what that's meant is that there's been a wide dispersion of returns amongst different asset classes. Second point to touch on, I guess, is the issue of responsible investing and environmental, social and governance issues. We've heard that alluded to several times. But what's really encouraging in the last year is that we've moved from a situation where it was, this is what we're planning to do, to actually seeing real tangible results. You just have to look at the stewardship reports that are coming through from our asset managers to see the tangible outcomes. And that's fed through into what we're able to report on from a superfund perspective. So if you've looked together at our integrated report, you'll see one of the supplements is our first sustainability disclosure report, where we really are engaging with what we as Superfund have done from an investment sustainability perspective. The third point I want to touch on, I guess, is the issue of transformation. Now there, I think I've got a good news story in terms of, our BEE levels and so on for our asset managers, but we've still got to do a lot of work with our asset managers to move them from the situation where the underlying situation, the actual ownership and the actual investment team are also transformed. So that we're not just looking at the big number, what's the BEE level, but actually looking at are the teams themselves being transformed.
Got you.
So those are three kind of high-level issues. Then we get into some of the really interesting developments. Regulation 28.
That was quite a surprise in the recent budget speech, right?
It was. Goodness me, we certainly didn't see that one coming. We've had the bubbling under news of changes regarding infrastructure, but suddenly in the budget speech, we've got this amalgamation of the offshore limit and the Africa limit to one combined limit of 45% across any offshore investment.
Why does that matter though, Gary?
Well, I guess, we've often heard from some managers saying, well, we want to be able to, have exposure to a wider pool of assets. Because obviously South Africa's, yes, we're a robust country, but we're still just a little drop in the ocean relative to the overall investment universe. But interestingly, the modeling that we're seeing from some managers now that they're saying, oh, wow, suddenly we can increase our allocation, quite a lot of them say, you know what, somewhere around 35% is probably the optimal offshore allocation in terms of their long-term strategic allocation. Obviously, different managers are going to come up with different answers. Some of them are going to push the envelope, go all the way up to 45%, but I think a lot of them will say, we've got South African liabilities, people are retiring in South Africa, and so we've got to get the right balance. Then, two-pot system. I mean, we heard Melusi and Michelle talking about it earlier.
Yep.
They talked about the practical implications from a member's perspective, but from an investment perspective, suddenly we've got to figure out how will our strategy work. We've now got the accessible pot and the non-accessible pot, and some people are going to see that accessible pot as saying, oh, this is like a bank account. I can access this money.
Short-term investment.
Exactly. We've got to find a way to balance the liquidity and the volatility needs of people who are treating it like a short-term investment with the fact that this money is still ultimately designed to be saving for your long-term retirement. And so that's going to be an interesting approach we've got to follow, a good balance we've got to find, managing those dynamics. And then I guess the last point to touch on is this issue of investment governance. We never get to rest in terms of just monitoring, are the investment portfolios we're offering appropriate for members? Are they well governed? Are they delivering the returns we need? But within the Superfund Choice, we've got our investment consultant who does a huge amount of analysis on that side. Within Superfund Customized, he's also doing a lot of work, but he's working with each of those large clients and their investment consultants. And we're trying to bridge the gap, work more closely with our large customized clients so that we are understanding their needs better and that we are supporting their investment governance while still providing sort of the overall coverage that we as a trustee board still have that fiduciary responsibility.